What are Contra mutual funds? Hi everyone. In today's video, we are going to explore the world of Contra mutual funds. You may have heard the term before, but how do these funds really work? What makes them different from other types of mutual funds? Let's break it down and understand how they may fit your investment strategy. What are Contra mutual funds? Contra mutual funds are a type of equity mutual fund that focuses on investing in stocks that are out of favor with the market. These funds take a contrarian approach, meaning they invest in companies that are currently undervalued or overlooked by most investors. The fund manager typically looks for stocks that they believe have strong long-term potential but are temporarily undervalued or facing short-term challenges. How do Contra mutual funds work? The idea behind Contra funds is simple. While the market might be avoiding certain stocks, the fund manager believes that these stocks will eventually rebound. They typically target companies that have solid fundamentals but are temporarily underperforming. These could be companies in industries facing a downturn or those dealing with short-term issues that may not affect their long-term prospects. Contra funds often invest in stocks that others may be selling off. This approach is based on the belief that the market can overreact to negative news and that these companies will recover over time. The goal is to buy these stocks at a low price and hold them until the market recognizes their value. Why invest in Contra mutual funds? One of the main reasons to invest in Contra mutual funds is the potential for high returns over time. If the fund manager's strategy pays off and the undervalued stocks start performing well, you could see significant gains. Contra investing allows you to take advantage of market inefficiencies by investing in stocks that others might have overlooked. Another reason to consider Contra funds is that they often have a long-term investment horizon. These funds tend to focus on the future potential of companies rather than short-term market movements. So, if you're willing to be patient, Contra mutual funds may align with your investment goals. Risks to keep in mind. Of course, there are risks involved. Since Contra mutual funds invest in underperforming stocks, it may take time for the market to recognize their value. There is also the risk that some of these companies may never recover, leading to losses. It's essential to keep in mind that this strategy requires patience and a long-term view. In summary, Contra mutual funds invest in undervalued stocks, taking a contrarian approach to capitalizing on market inefficiencies. While they come with potential rewards, they also involve risks and require patience. If you found this video helpful, don't forget to like, comment and subscribe for more insights. Thanks for watching. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.